Hey, what's up, my friend? Welcome back to another week of our weekly market analysis, alright? I've got three things for you today. The first thing is that I'm going to talk about a loss that I had on this trade. And I want to share with you, the loss that I took, right? Not so much about what we can learn from that particular trade that was a loss, but rather, I want you to think in terms of how do you actually embrace your losses. Because often, right, traders, when they get a loss, when they are hit with a loss, they'll tend to look back at the trade and ask themselves, what could I have done to prevent that loss? Right? Is there a pattern? Is there something I can look at to actually prevent the loss? If you think about along that lines, right, I would say it is a very serious mistake. Okay, because before you know it, right, you're gonna have so many funny filters in your trading plan that you will tend to never take any more trade again. So I want to talk about that portion of it, right, into how do you actually handle your losses. That's one. Second thing is I'm going to share with you a couple of trading setups that I'm pretty excited about, and I just want to share with you my entries, my exits, and what are these markets. And lastly, I want to talk about the fear of losing, right? Because often, right, I've get questions from TFMP members, from traders who talk to me, who ask me, hey Rainer, if you put on a trade and the trade goes against you, right, would you manually exit the trade so you don't take a full loss? Or would you let it hit your stop loss? So I want to discuss about this, right? The fear of losing, right? Whether do you let the trade hit your stops or do you manually bail out? So all this and more in today's video. I'll see you there. Okie dokie. So the first market that I want to talk about is silver, right? This is the silver market. This is the daily time frame, and if you recall, right, I mentioned that I was actually looking to short silver, and this is a loss that I took, and I just want to share them with you, right? Because really there is nothing to hide, right? Trading, if you're not having losses in trading, or you're not sharing your losses in trading, then I think something is fishy, right? Because as a trader, no matter how good you are, you will face losses, right? And the more you talk about it, right, it's kind of like the more you're embracing your losses, right? Knowing that this is simply the cost of doing business. So silver, this is the daily time frame. Basically the trend is down, so I was looking to short this market. Right, you can see lower highs, lower highs, lower highs, and this level of resistance. Right, so where I got my short as an entry trigger is when price came into this level of resistance, right? And we had this false break over here, right? Notice that this candle traded higher and closed lower, right? So this is telling you that there were no buying pressure to push price higher, because if there is, right, this would have been a legitimate breakout, but it didn't, right? So that to me is a sign of weakness by the buyers, right? So what I did was that I went short, right? I went short over here, and I had a stop loss of 1 ATR above the highs, which is somewhere here. Okay, so you can see that the market, right, wasn't really the best of trades to hold. You can see it went in my favor, it went against me, went in my favor, finally thinking, oh, okay, the market is finally going to trade lower, right? Like this, right? Because you see price trading lower, and the next thing you know, you get boom, this bullish engulfing, breakout, and stop me out, right? So this isn't the easiest trade to hold, but this is the reality of trading, right? Sometimes the market can appear to, start moving in your favor, right? Finally, the money is coming in, and then it reverse, and you got stopped out, right? And this is the fact, right? This is the reality of trading, and I just want to share them with you, right? This is a trade that I would have taken over and over again. There is nothing wrong in this trade, right? Basically following my plan, right? Trading with the trend, right? Trend, area of value, and number third things I had was the trigger, right? So there's nothing, complicating about it. It's pretty much simple. If you've been watching my videos, this is the same three things I repeat over and over again, right? On top of it, right, you still have your risk management and stuff like that. But in terms of setup itself, these are just the three things I really look out for. So a mistake that traders will make is that every time they take a loss, they will start looking back at a specific chart, looking back at the setup, and ask themselves, right, what could they have done to prevent the loss, right? This, if you ask me, right, can be harmful, because every time if you take a loss on each trade and you look back at the chart, right, you can definitely find patterns that on hindsight, right, may tell you or would have tell you to skip the trade. For example, this one over here, if you look at this, over here you have this inverse head and shoulders, right, that form. Okay, but on hindsight, you look at it, oh, there's an inverse head and shoulders, right? I shouldn't have short this because this is a bullish chart pattern. But hey, come on, right? Are you a chart pattern trader? If you are, then yes, take this into consideration. But if you're like me, right, I don't take into consideration specific chart patterns to give me an entry and exit, right? I trade with the trend, I trade with an area of value, and I trade when there's an entry trigger to go short. That's my key focus, right? So do not find certain patterns that exist right after the trade is over that could help you prevent the loss, right? Losses will occur from time to time. You can't avoid it. Alright, so this is you want to be careful of this, right? Sometimes when you take a loss, right, be careful of what your mind is telling you, right? Because sometimes they will tend to find patterns to help you prevent the loss, to prevent the pain, right? And if you do that long enough, right, you're going to find that you have so many criteria on your trade that you're never going to put on any trade in the near future, because oh, this pattern says I can't go short, this pattern says I can't go long, oh, there's an analysis paralysis, oh, conflicting of information, oh, what should I do, right? You feel me, right? So this is something that I want you to be aware of. So this is a trade on silver, right? I'm perfectly happy to take the loss because, right, this is simply following my plan, right? And I know if I do this over the long run, right, I will make money. Okay, so this is just a loss and the cost of doing business. Okay, moving on, right? The next thing I want to talk about is dollar against the Swedish Krona. Where is this? Right, it's a potential setup that I'm looking at here. Okay, so maybe I just give you the big picture of what's going on, right? So if you look at the weekly, right, I think this was a chart that's actually posted in the Trading with Rainer group, right? Someone posted the price is coming to a key level. So the key level is 875, right? You can see this red line over here. This is a weekly resistance level. That price broke out of it and then becomes previous resistance turn support. So this is a key level to watch for, right? You can see that price has already closed higher. Right? For me personally, if you look at the daily time frame, why I like this setup is that number one, price has come into this key level. Okay, this is this 875 level. Number two, if you go down to the 4-hour time frame, you notice that there is an inverse head and shoulders pattern, right? I don't trade this pattern in isolation, but but when this happens with the trend, right, with the long-term trend and with other confluences, right, this pattern serves as a validation that we could see, or rather you could see, right, a potential move higher. It's not confirmed, right, but it adds on as a confluence factor. Okay, I don't trade chart patterns in isolation, but you can see based on what I've shared with you earlier, right, I was actually looking at the higher time frame trend, key support resistance level, and then this pattern form, right, we sort of validate the level that price is rejecting it. Okay, so that's number two. And the third thing is that the line you saw earlier was the 200 MA, right? So you have quite a number of factors coming for this trade. You have the 200 MA, you have this key support level that is based on a weekly time frame, and you have this inverse head and shoulders pattern that you can see right on the 4-hour time frame. Right, so for me personally, I'm looking to long, right? If price can retrace back, right, somewhere towards the 87 level, somewhere here, right, and I look to go long on this trade. Okay, so let me share with you, all right, in case of you, some of you want to know what's the level. I'm looking to place a buy limit order somewhere around this level, right? Stops of 180 are below this low, which is somewhere maybe here, around here. Okay, so this is a trade that I'm looking at, right? Dollar against the Swedish Krona. Another thing that I want to share with you is copper, right? This is a trade that has also moved quite a bit. Copper, right? So why am I interested in copper, right? If you look at copper, the weekly time frame, right? Okay, let me share with you the daily first, right? If you look at the daily, right, you look at this point in time, man, Rainer, are you sure, you want to trade this, price is so high already, look, how overbought it is, right? So you can see, yeah, price is high. But if you look at the big picture, if you look at the weekly time frame, and you just push back a little, or rather just zoom out, you notice that in terms of how high or low it is, right, it is not actually very high because, price has been slumping over the last few years. And recently, only recently, it basically broke out of this, you call this an ascending triangle if you want to, right? It broke out. And this is in fact, right, the first pullback that occurred on the weekly time frame. And price seems to be breaking out again. So if you ask me, right, I feel, or rather, my take is that copper still has further upside to go, right? But honestly, right, my trading is not based on how I feel, right? It's based on what I see. So what I see now on the daily time frame is that price has basically broken out of this highs over here. Okay, I'm not in this trade yet. So what I'm looking to do is that if the market can retrace, right, back towards, say, somewhere this black line over here, I'll have a buy limit order to go long at this level, right? My stops is 180 are below this low, which is somewhere here. Okay, why am I putting my stop loss over here, right? Because if you think about this, the market can actually retrace lower, and this acts as a area of support, right? And I don't want to be cutting my trade into this area of support. It does not make sense if you ask me, right? Support is an area that I want to go long, right? So I don't want to cut my trade into this area of support. So I will put my stop loss below it. All right, give it some buffer, right? So this is copper, something to share with you. And last but not least, I want to talk about dollar against the African rand, right? I want to talk about this trade, and this is not really a setup that I'm sharing, but rather I want you to think deeper about an issue which a lot of traders have talked to me about, right? Even those from the TFMP program, right? They've talked about this thing called the fear, not the fear of missing out, the fear of losing, right? FOL, let's call it fear of losing. Why is that? Because a lot of times, right, traders, they ask me this question: hey, Rainer, if you put on a trade, okay, and the market goes against you, would you exit your trade earlier so you do not take a full 1 hour loss? All right, let me share with you an example. So in this one over here, you can see, right, in this one over here, you can see that this is an area of resistance, right? This black line over here. So I went short when price actually, this spike higher, actually trade into resistance, and the next candle it closed lower. So I placed a sell order over here. I went short. Right, my stop loss is again, right, a buffer away from this resistance, so it's somewhere over here. Okay, so you can see that this obviously isn't an easy trade to hold, or rather to start with, right? The moment I went short, price went against me. So while price is trading against me, there is a lot of opportunity to quickly exit the trade, right? Because I'm having a loss, and if I don't want to take a full loss, right, I could exit earlier. But the question is this: why do you want to do that? Right? Why do you want to do that, right? Because you know that, for example, for my case, my stop loss is over here, right? It is at this level where if price were to reach it, right, it would invalidate my trading setup, because this over here is the area of resistance I'm looking at. If price were to get to here, chances are this area of resistance isn't holding anymore. Okay? But until then, until price reaches this level, right, I am still not wrong. So yes, price can, trade against me, trade higher. Alright, but has it invalidated my trading setup? No, right? If you think about this, if you exit your trade at this level, what you're basically doing is going long at resistance. Why do I say that? Because if you put on a short trade, right, and you have a stop loss, right? Your stop loss is basically in order to go long to exit the short trade, right? So you're basically going long into an area of resistance. Does it make sense? No, right? I'm sure you can agree it does not make sense. Why would you want to go long into resistance when the trend is down as well? Okay, so this is something that I want to point out to you, right? The fear of losing, right? You want to be aware of it, right? I'm not saying that it is wrong to exit your trade ahead of your stop loss. Some traders do that and they do that well, right? But for me personally, I know my stop is at a level where it shouldn't be reached. If it's reached, right, I know I am wrong. But until then, until the market hits that level, right, I will still stay in the trade because the market has not invalidated my trading idea. Okay, so in this case, right, the dollar against the African rand, right, this is a trade that I'm still in, right. You can see that it's grinding slowly towards the downside, right. I'm just trailing my stop loss, right, and we'll see how this goes, right. But the point on this is that, you want to know when the fear of losing is, have implications on your trading. Right, the fear of losing, right? You do not exit your trade just because the market has went against you, right? Trust your stop loss, right? I believe you have placed your stop loss at a location that is appropriate, right? Trust that your stop loss will get you out of trouble if, things don't go your way, right? And think about this. What is the maximum loss can you take, right? If in the FX markets where you don't get much slippages, the max loss is 1 hour. Usually, most of the time, 1 hour loss, okay? And if you do catch a trend, what is your potential profit upside? Well, 3, 5R, even 10R. Or for example, if you traded the crude oil in 2014, right? That is a trade of 40, 50R. That is not a problem at all. Right? So think about this, right? The maximum loss is 1R. It's not really a lot. If you're risking 1% of your account, it's 1%. 1%. If you're risking, 0.5% of your account, it's 0.5. Right? Take the loss. Take the 1 hour loss, right? Because when the trend goes in your favor, it will more than compensate all the little losses that you have accumulated over time. Right? Do not fear your losses, right? Do not fear it, right? As long as you have proper risk management, as long as your stops is at a proper location, away from support resistance, right? Then really, right? Trust that your plan will work out over time. All right? So yeah, that's all I have for you in this week's video, right? Lastly, just want to share with you, for those of you who are unaware, right? This is my website, tradingwithrainer.com. There's a new segment I have recently. It's called Ask Rainer. So this is basically a lot of rather questions that I get, right, from traders over time. For example, when is the best time to enter a trade? when is the best time to exit your trade? So these are a lot of questions I've gotten from traders over the years, and I just basically do it in the form of a Q&A style, right? I basically answer these questions based on my own experience in trading. So if you have any questions that you want me to answer, you can always leave it in, this comment section over here, and I will review your question. Right? If I find that, it's better to answer in the form of a video, I'll do so, right? So this kind of like give me ideas into, what type of questions I can answer and to benefit you traders out there. Okay, so with that, alright, that's all I have for you in today's video. If you have enjoyed this video, right, hit the subscribe button below, like the video, and if you have anything, just leave it in the comments section as well. With that, I wish you all good luck and good trading. Talk to you soon.